30,500. And what's remarkable here is that you just continue to hammer on this. On Friday, we saw a push above it, but by the end of the day, we closed right at that level. And here we are down ticking again. Granted, it's the weekend, so light volume. It's one of those weird things, right? Bitcoin's open on the weekends, but I don't put a lot of stock in the price action on Bitcoin because it's such light volume over the weekend. But I think that Monday is going to be a pivotal Monday, Tuesday, very pivotal for Bitcoin, because you'll get some more price action going in there with the markets open and yields and the dollar moving. The question is, can it break above this level?
This seems to be the calm right before the storm for Bitcoin, the world's largest cryptocurrency by market cap. But several renowned analysts, including popular technical analyst Gareth Soloway, agree that the storm could go either for the largest crypto asset. Last week, the leading crypto asset again breached the $30,000 range and continued to rise after US CPI data revealed that inflation cooled off briefly in March. But like the rest of the market, Bitcoin seems to be giving back some of those gains to begin the weekend. According to Gareth Soloway, the market is going into a pivotal point next week, especially as we go deeper into a 2023 Q1 earnings season. On Friday, JP Morgan reported an unexpected increase in deposits and boosted its guidance for its net interest income, a key driver of profitability tied to loan operations. Following the unexpected increase, the financial behemoth's stock rose by 7.6% on Friday, its biggest daily increase since November 2020. Other financial giants, including Bank of America, Morgan Stanley, and Goldman Sachs, soon joined the rally, further deepening the disparity between their stocks and those of their regional peers. The deepening disparity between the nation's largest lenders and smaller regional banks seems to be breeding another round of banking sector crisis, which would no doubt add more pressure to the burdened economy. In a recent interview with Greg Dickerson, Soloway discusses his outlook for the overall economy and various asset classes, including Bitcoin, the S&P index, and gold. For Soloway, the next few days are very important for the largest crypto asset, as they would help determine whether we are in a bull market. Still, he grudgingly admits that the asset is quickly maturing and showing less correlation with the stock market. Before we listen to Soloway's discussion with Dickerson, please take a little time to like this video, subscribe to the channel, and turn on post notifications to get instantly notified whenever we upload a video. Also, ensure you drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm so our videos can reach more viewers. Thanks and enjoy the video.
My level, again, we talked about this, I think it was about 2+ weeks ago when we were chatting, 30,500. If it breaks above that level, like I think we talked about a couple weeks ago, for me, it needs to show me that it can stay above there for a certain amount of days, multiple days, versus just a quick blip above, fooling everyone and then coming right back in. But this is a huge level psychologically, right? I mean, this, again, we talked about this last time, but you're going back to these levels here, going back to the lows of the bull market, even the pre-big run here, and then even this consolidation area over here. And that's my biggest issue is the charts right now still show that we're into this area. And then number two is, to me, the bullish sentiment in crypto right now is very similar to when I made the call that 69,000 was going to be a fall and we were going to go to 20,000. And it's that psychology. We looked at that psychology of the market chart earlier. Those things are kind of eating at me in terms of whether or not this bear market is fully over. Now, whether or not we've made the lows, obviously, we should know in the next 6 months or so. But at least in the near term, something likely to me will trigger a sell-off back down a little bit. I'm still in the camp personally that it's still mostly, I would say 3/4 of it is a risk asset. What I've noticed over the last 3-4 years of Bitcoin is that it was 95% a risk asset. Well, at one point it was 100%. Then it was 95, then it was 90, then it was 85, 80, and now we're at 75. So like for the banking crisis, there's no doubt about it. That was an awesome situation for Bitcoin. We showed it decouple when the markets were selling off there. So I think it's slowly maturing. It's kind of like an adolescent that needs to get into adulthood here and mature. But I still think that in this scenario, if you see a real panic hit the stock market, we see, let's say 20% down, my guess is it does decline for the most part. I think like gold, even in all fairness, if it's full out panic, everything declines, right? We even saw gold in COVID quickly dip before recovering. But the question then is, if it's a longer term bear market in stocks, I still think it does get put pressure on it. But again, slowly it's maturing into a gold type entity.
Let's take a look at gold real quick. I'm seeing a triple top in gold with a big reversal. What are you looking at?
Yeah, so I'm with you on that one. Is you're definitely coming up to that. We did hit just on Friday or Thursday this upsloping trend line right here through the recent highs. So to see a little bit of a sell off there, not a big surprise. But I agree. You're coming up into a range where there's going to be a massive wall. Usually at triple tops. So triple tops are different than double tops. Double tops, you usually see a big pullback. Triple tops, it's usually a slightly lesser pullback, and then a breakout. So again, usually you'll see that type of action. So if we did get up there, I would still expect a pullback, but it would be a shallow pullback, maybe 1900, maybe 1875 before that next leg up. I still think that gold in terms of risks is probably the lesser of the risky assets to be in here with a decent reward to it.
One interesting and important point Soloway has raised is the gradual maturity of Bitcoin as an asset class. He has stated that Bitcoin is only 75% correlated with the stock market. Other analysts and Bitcoin advocates might disagree with Soloway's figures, but the bottom line is that Bitcoin is maturing and showing less correlation with the stock market. And this could not have come at a better moment with so many experts predicting a tough couple of years ahead for the S&P and other stock market indexes. During his discussion with Dickerson, Soloway discussed his outlook for the popular stock market indexes. As bearish as he has been on Bitcoin, Soloway is somehow even more bearish on stocks. According to the popular technical analyst, the stock market is currently at the complacency phase in the Wall Street psychology of a market cycle. This is just after the euphoria phase and precedes the anxiety, denial, panic, anger, and depression phases. Let's get back to the interview as Soloway details what he sees ahead for the stock market and the overall U.S. economy.
We saw the bank earnings on Friday. JP Morgan was really the standout, and that was a tremendous report. Again, they blew it out of the water. Interestingly enough, what I noticed was that while JPM was up, we saw a lot of the regionals continue to fall, and that's never a good situation when you have good earnings from one bank, but the rest can't catch a bid. So that's a little bit of a concern going into next week. I also thought that the early sell-off in the S&P 500 was concerning as well, where you had this good news, the PPI came out the day before, everything was kind of rosy, and the markets opened up, and then they just gave it all back. And essentially, we closed flat on the day. Late in the day, we got a little float, but that's normal on a Friday with light volume at the end of the day. The big players kind of leave for the day, and you see that gentle float back up. So overall, the price action wasn't good on Friday considering. And it is interesting to kind of see how the markets are shaping up here. We got this potential doji on Friday. Again, we have to see what the market does next week. But I think, like you said, it's earnings, right? We have the Netflix earnings on Tuesday after the close. Wednesday after the close is Tesla. And then the next week, we have all the big tech play companies coming in. So, as I look at this market, one of the big things, and this, I did a video earlier this week, but I know a lot of people didn't see it yet. But one of the things that's concerning me is something that my head trader, Ben, pointed out, which was this pattern here, right? So what we have is this down move from the all-time highs on the S&P 500. And then even though it looks like we're making higher lows, if we look at a chart, and I'm gonna switch screens here. I want to show you guys this because this is really earth-shattering to me in terms of what it could entail. So this is the psychology of the market, right? And we've all probably seen this chart at some point in time. But if you look at the move we had, so here was your run, let's say from COVID up, right? So the big move to the upside. Then here was your high in 2021 and the sell-off that followed. And then look at the price action following that. You're generally seeing the same, almost to a T, almost perfectly the same pattern, which denotes the complacency period on this psychology of a market chart. And what we know is that following that in general, we have a bigger down move. So to be honest, looking at this, looking at how the markets have been behaving, I do think that there's a bigger sell-off coming in the works here in the not too distant future. I look at past bear markets and this one to me could be worse than many of the past ones because you actually have a Fed that has hiked rates percentage-wise bigger than really any time in history. I don't remember, even in the 80s, you didn't see the percentage wise, like here we went from 25 basis points to 5%. I mean, think about how many hundreds of percentage points that is, even versus the 1980s where we saw those interest rate increases. So that to me has to at some point play out as a shock to the system that finally comes to fruition. And it is something that I do think we will see not only the October lows of 2022, but even further on. If we flip over to the Apple chart here, right? Apple's had a remarkable move. Absolutely remarkable move off of the lows. It's not that far off all-time highs, but if you compare Apple's chart to a lot of the other just average companies out there, you've seen rotation into what we would call best of breed as a safety play, right? So Nvidia, Apple, Microsoft, right? And to me, that's a concern because it's not that people believe that Apple is a great value here. And in all fairness, I think it trades at like a 30 or 25 forward PE. And historically, that's even rich, even in bull markets. But it's more that are people just hiding in those plays while the rest of the market continues to kind of languish. And you could bring up a bunch. I mean, there's so many just kind of average companies that aren't known as those special companies, and their charts are not very good at all. And again, to me, it spells people hiding right now, and then at some point they will get freaked out enough to even exit those. And when we see Apple and Nvidia and Microsoft collapse, that's where the NASDAQ really comes hard down.
Can the Federal Reserve pull off a soft landing and somehow save the banking sector, lower inflation, and come to the aid of the markets without sending us into a recession? That would prove a daunting task for a central bank with a great track record. But the Federal Reserve's performance has never been stellar. It has always had one go-to solution for everything: to return to the printers. But that would not only prove foolish now, it would be against everything Chairman Jerome Powell has said since they started hiking rates last year. Returning to the printers might be the only viable fix, yet it's a dangerous move that will undoubtedly start another vicious cycle. What are your thoughts on Gareth Soloway's analysis of the current market trends and the overall economy? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.